Welcome to Wisdom Owl. Wisdom Owl is a platform which helps you find the most undervalued and overvalued opportunities in the market. Currently, there are around 1,000 companies, the top 1,000 by market cap, listed in the US stock exchange. As you can see, there are currently coverage of around 1,000 companies. Now, among these companies, today we are going to talk about Palantir Technologies. Palantir Technologies, Wisdom Owl thinks that can see strong revenue growth in the coming future. That's the future outlook. And based on this strong revenue growth, it thinks that the current valuation is overvalued, right? And why does Wisdom Owl think that? It has released this stock research report. So let's go through this. Now, as you can see, there are four things which we are going to talk in this video. First is the investor summary. This is the page where we are going to understand what is Palantir's business, how is it making money, where the most growth is coming from, and what should investors be cognizant of in terms of the pros and cons of the business. Then we'll talk about what has happened at Palantir in last 5 years in terms of the financial health of the company, right? And then, as all finance is about the future outlook, Wisdom Owl will give some future estimates in comparison to what the analysts are thinking. And then we'll go through why it thinks that the valuation is overvalued right now. So let's talk about how the business makes money, right? Like Palantir Technologies provides like real-time complex data analysis for critical decisions in government and commercial sectors. Okay. And then the revenue comes from multi-year contracts, right? That emphasizing the recurring income and commercial expansion. As you can see here in this plot, in last 3 years till December 2024, 55% of the revenue is coming from government sector, and this 45% is coming from commercial sector. And their revenue has been growing in both, but more or less the product segmentation revenue remains in same 55 to 45 ratio. Now, if in terms of the primary revenue engine, government sector, especially with US and allied defense and intelligence agencies, brings in the most revenue for Palantir. But the highest growth segment is this commercial sector is becoming the highest growth segments as the company is focusing on enterprises in almost all major types of businesses. They are also strategically expanding into North America, Europe, Asia Pacific, and Middle East. And they are investing a lot on their AI platform and giving state-of-the-art AI-driven analytics capabilities. If we talk about the pros and cons of investment, looking Palantir as an investment opportunity, definitely they are diversifying the revenue via commercial expansion, and this reduces their reliance on government contract, which is definitely a pro. They have a competitive advantage because they have long-term contracts and long-term relationships with their clients. And the company has shown a lot of financial strength with their revenue already reaching some profitability in 2023, 2.2 billion, and even after that there has been a double-digit revenue growth. Now, there are some strategic initiatives, more around AI and a lot of investments happening here. These are all pros of the business. But similarly, since there is heavy dependence on government contracts, this becomes one of the risks of Palantir. And there is a lot of competition coming in this data analytics space, which might also erode some Palantir's market share. And since it's kind of a SaaS business, this also has some operational risk and industry risk. Now, if you want to understand, some of these questions in detail, right? How will they expand its customer base beyond government contract, and they're already doing that. Then similarly, what are their key competitive advantages? How will Palantir navigate increasing competition in the data analytics space, etc., you can log on to this platform called app.wisdomowl.ai in order to understand each of these questions in much more detail. Now, this gives us a broad overview of how Palantir as a business is making money, right? Now, let's look at what has been happening at Palantir in terms of their accounting and important ratios in last 5 years. So, as you see, in from 2023 to 2024, their earnings actually became positive, and they have been positive in last two financial years. And going forward, they are projecting much more increase in their uh, um, earnings per share, and the price has also followed this trend, and it is at around $186 right now. So WisdomAll thinks that the investment thesis for this company is that it demonstrates strong fundamental improvement as it transitions from growth at all costs to profitable scaling, right? Now, the software platform shows excellent margin characteristics and operating leverage, and but the current valuations seem to be high, and they show ambitious growth expectations from the business. So it says that investors should focus on continued commercial expansion and also on the margin progression. Now, if we see, these are like wisdom all things, these are the top 10 metrics which we should be looking at in order to see or understand what has happened in last 5 years at Palantir. So return on invested capital, one of the most important metrics. As we can see, it has been increasing consistently, and once it became positive in 2023, it has almost tripled in terms of the trailing 12 months, right? So there is steady improvement, and it's a big green signal. If you see gross profit margin, they are like around 80%, right? Consistently high and improving margins. It's a characteristic of software business with scalable platform and low marginal cost. Definitely like very low cost. Again, a green signal, their free cash flow per share has been increasing consistently. One not green, but a yellow signal, and one which should investor be looking at, is their revenue per share. Though their revenue has increased, but as you can see, it has not increased quite a lot, right? Because maybe there is some share dilution happening, and Wisdom All thinks that there is steady growth since 2021 dip, and there was some anomaly in 2020, and this might be because of some customer concentration or contract timing issues, right? So this is something which should be looked deeper into, that why is this revenue per share not growing at a very high scale. Again, their net profit margins are amazing, consistently increasing from around 10% to 22% in last 3 years. Their R&D has also been at a very high percentage to revenue, and though revenue is increasing consistently, so of course this has outpaced the R&D spend, right? But still, they're maintaining critical investments in the R&D. Very strong liquidity position, as can be seen by the quick ratio, and similarly minimal leverage, right? Like their debt to equity ratio is very less than 1. So that's a very green signal. Similarly, their operating profit margins has been consistently increasing, and remarkable turnaround since they became profitable. But there is a red signal, which is if you see like price to free cash flow ratio, right? Like one of the most important metrics to look at for valuation, and even in last 5 years, this is extremely high valuation multiple, suggesting market is pricing in aggressive future growth expectations, right? Now, if you see, these are like some of the points which we talked about already in these 10 metrics. Now, based on all of this, what is the future outlook for this company? All right. So the first important thing to note here is that it's an early growth stage company with stable growth, which we can already see. So it's better to look at revenue as the ideal metric for, gauging its market penetration and overall expansion, because maybe the earnings are in very initial stages. So probably looking at revenue to understand the future outlook is a much better metric, and that's what Wisdom All suggests. Now, this is like what Wall Street analysts are estimating, that in next 5 years, their revenue might grow from 4 billion to $13 billion, right? But Wisdom Owl, looking at it from a very conservative point of view, even if it says that, okay, their revenues can grow at around 15%, looking at it from a conservative long-term investor point of view, that means that in next 5 years, their revenue can grow from 4 billion to 7 billion, right? Which is almost 40% less than what analysts are estimating, but this is like a very conservative uh, outlook. And then here we can go through what and how this 15% number has been estimated, right? So one of the most positive contribution to this 15% number is the expanding high margin commercial business. As we have seen, it's a high margin commercial business, and Palantir's focus on attracting enterprise client leads to substantial revenue increases due to higher adoption rates and large contract sizes in the commercial sector. So these are like some of the most positives. And then further, there are some negative factors which it takes into account in order to subtract it from the positive factors. And you can go through it in detail here, right? Something like around cloud infrastructure costs might increase, like they might have some pricing pressures from the competitors, and it reduces the future outlook by around 1%, taking this into consideration. And if there might be some other popular questions around Palantir's, balancing their government contracts with growing commercial sector ambitions. Can they maintain profitability? How do they differentiate from the growing competition? So all of these questions can be looked at if you want to go through it in detail, right? You can log on to app.wisdomowl.ai and read it yourself. Then the last important piece is why it thinks that it is overvalued, right? Though we discussed that earnings might not be the best metric to look at for Palantir because it has just become profitable. But even if you look at it from, say, forward earnings point of view, right? Currently, it is trading at around 400 uh, ratio, like the forward PE ratio for it is around 400, which is extremely, extremely high, even compared to its, like throughout its history, right? It shows that in the nearest correction, which happened in, say, 2022, right? This was like the lowest it has gone, and it was trading below 50 forward PE in and quite a few times. And even after it became profitable, it has been trading somewhere in the 100 peak forward PE range. But currently, it's very overvalued at around 400 forward PE. Similarly, if you compare this forward PE to its competitor, which might be Snowflake, which also is into this data analytics business, they trade, this might also be overvalued, but they are trading at, say, around 250 or 275 forward P. And even in comparison to that, this is pretty high. Now, as we discussed, that revenue might be a good way of looking at Palantir, since it's an early growth stage business. Even in terms of price to sales, right? Like price to sales ratio of Palantir, it's trading at like 128 times of its sales. This is extremely, extremely high, and Wisdom Owl thinks that this is probably an overvalued business right now at its current valuation. So this was like a short analysis into Palantir's business and its current valuation. And if you like this analysis, you can read it about any of the businesses. So for instance, out of top 1,000 companies, you can look, okay, these are the most undervalued ones, right? And maybe you only want to filter for technology businesses. So if you like this analysis, you can read any of the analysis on these companies and understand uh, which are like some of the best opportunities in the market right now. So you just have to log in into app.wisdomowl.ai. And if you like or dislike our analysis, please share your thoughts in the comments and we can make it much better going forward. Thank you.